Hey traders, welcome back to this week's weekly Forex forecast. Last week was a very slow week. The markets were ice cold. We did produce another winning week in the books with GMT members with our GMT setups, but it was difficult. It was pretty tricky. In fact, we only took 2 trades last week. Both were winning trades, but that was pretty much all we could squeeze out of the market last week. Coming into this week, however, totally different story. We've got 4 interest rate decisions, so next week is likely to be a very volatile week. We're probably going to see all kinds of big moves in the markets, and there should, with that, come quite a lot of opportunity as well. So kicking off the video, as we always do, we're going to just look at euro dollar here first and foremost. And when we go through the portfolio selection in a moment, you're going to see that the euro to the long side is one of my top themes going into next week, and US dollar to the short side versus the other currencies is one of my top themes next week. So what you'll see is that I can only be long euro dollar next week or do nothing, regardless of FOMC on Wednesday. So FOMC on Wednesday comes out. We are looking at a potential rate cut, 25 basis points. However, just bear in mind that does not mean the US dollar has to go down. Yes, interest rate cuts are, bearish for the domestic currency. However, we saw in the last meeting, for example, with the RBNZ, where they cut interest rates by 25 basis points. And then in the press conference or in the rate statement, they said that they are not going to cut rates again next year. What happened? The New Zealand dollar rallied even though they cut rates. So this is why you cannot really predict with any kind of certainty the outcome of an interest rate decision. So very often, when we're looking at these rate decisions, those of you who follow these videos often will know that we kind of war game the different scenarios, and then we're reactive. We're looking to be reactive for whichever scenario plays out. So we kind of cover all our bases. We're ready. We're prepared. And if we get a setup, we'll pull the trigger on it. But we're not trying to predict the outcome of an event, which really is unpredictable. So going into next week, I can only be a buyer of this or do nothing, regardless of FOMC. And if we add into that the potential interest rate decision, again, we can only get 3 outcomes really from an interest rate decision. Okay. We can have, I should put this as a 0, just a kind of neutral. We can have a bullish outcome for the domestic currency. So FOMC is going to be the US dollar. We can have a neutral outcome, or we can have a negative outcome. In other words, the currency goes up, the currency goes down, or the currency does nothing, right? Pretty obvious stuff. So going into next week, what I would like to see is the following. If we get, first and foremost, we'll start with nothing really happening. Okay, so the market tends to move sideways. So going into next week, euro dollar pretty much does nothing. And maybe we correct down a little bit and we go into Wednesday here, okay? If nothing really happens, they cut rates, they come out, the rate statement is kind of also not really giving anything away. Now we've got a rate cut as expected, and they haven't really said anything in the rhetoric that goes with it. Well, maybe the market will just shrug it off. We see that often. The market just shrugs it off and says, okay, we expected all of this. There's nothing in here that's a surprise. Then I would start to look for euro dollar just to continue to drift down and test the 1.15619. So this is where we enter the buy zone for those of you who follow these videos on a regular basis. And all this is we're looking at here is a projected range into next week. And this is in the Hedge Dash Analytics platform that we're using here. Updated every week, every day, every month, etc. But we're looking ahead 1 week where the market is predicting that this asset should not close the week outside of these blue levels with a 68% expectancy and outside of the gold levels with a 95% expectancy. So what that means is that if we trade below the blue level and we're between these 2 levels, we're essentially oversold during that week. And there's a good chance of the week snapping back, that weekly candle. And vice versa, if we enter this area here, we're in what we would term the sell zone, because this is where the odds start to shift significantly for a reversal back in. And we saw that actually with multiple pairs last week. So coming into this week, if we get a neutral outcome, I'm going to be looking for a breach of the 1.15619. And this is where I'm going to be looking for a failed breakout below this low. So what we're doing is we're just simply combining a market which is in an oversold condition with a key area of support. And primarily we want to look at support, which in the past has driven price higher, if we're buyers. Because you can also have a breakout of resistance, like this, and then it comes back. That's also support. So I much prefer to look for prior lows, as support if I'm buying. It doesn't mean I won't buy, from these kind of stair-step bounces, but it just means given the choice, I'd prefer to see a price point in the past which drove price higher if I'm looking to be a buyer. So what we're basically saying is if the market turns oversold, there's no real catalyst here, and sellers attempt to drive price below this low in an oversold area, that I would expect them to fail. And as they pull their positions, this is where you're going to get that kind of 1 or 2 day liquidation to the upside. This is where you can get paid. And remember, a trading week is only 5 days, and we're looking to capture 1 or 2, in any given asset. It's pretty much, you have to give the asset room to move as well, right? We're not going to sell everything at the high and buy everything at the low. So within 5 days, realistically, we can reasonably expect to capture 1 or 2 days in an asset. And that's if we time it well. So that's what I'm going to be looking for on a neutral outcome. If we get a bullish outcome for the US dollar, so, kind of like New Zealand, they cut rates and they say in their forward guidance, they're not going to be, cutting rates in the future, and you see the dollar rally. This is where we get a bullish catalyst for the US dollar, and a bullish catalyst can easily push markets to their gold levels. So we shouldn't really expect these gold levels to be hit unless we have a significant catalyst. Well, do we have that next week? Well, potentially yes, because we've got FOMC. So if we get a very negative outcome, I will be looking for price to come down. I'll still look at this low because I'll see maybe it's not super bearish and it's still, price still gets stuck here and there's still a buying opportunity. But just be aware, if they come out and cut rates by 50 basis points unexpectedly, then I would start to look at this down here. We go straight through this level like a hot knife through butter. We pause kind of halfway and then we test here. In that scenario, it's this level right here, okay? The 1.14609. So there's two levels, the 1.1554, which I'm going to be watching in the event of a neutral outcome, and the 1.14609, which is extremely oversold once we take out this gold level in the event of a bearish outcome. Okay, that really just leaves one more thing, which is if the market's kind of consolidating, breaking below its or chopping around its moving average, and then you get a bullish outcome, that's when you can look for that potential news catalyst. So it rallies hard in the direction we're looking at. The market kind of pulls back, consolidates above its moving average, and then you get the next leg up. Maybe it pulls back, tests it again, next leg up. But usually in the 4 hours, you get one of these, a solid bull flag within a week. And what I like about this is there is a nice profit target up here. So just like in the buy zone, I want to be using this low in an oversold area to enter a buy position. It's exactly the same on the other side. If I'm in a position and I want to exit for a profit, once this market turns overbought and we hit a resistance area, then I would want to book my profits, right? Makes sense, the logic in that. So those are the three kind of scenarios we can expect post FOMC. I am going to be using this exact same framework as I always do with members in real time in GMT throughout the week. We're going to be using this on the other interest rate decisions that are coming up next week as well. Okay, so moving on to the portfolio selection. And remember guys, if you do enjoy these videos and you find them helpful, you feel like you get some value out of them, be sure to subscribe because it does really help the channel and it does make a big difference to the channel as well when you do that. I know it's easy to forget, but I really appreciate all of you who have done that. Now, in terms of the portfolio selection coming up next week, it's clear that the Australian dollar is the number one to the long side, the Japanese yen is the number one to the short side, and the US dollar is the number two to the short side. Everything else there is kind of neutral, but the Canadian dollar had a massive up day on Friday, which was yesterday. And this was because of very, very, very strong jobs data coming out of Canada. So going into next week, I definitely want to be looking at potential buying opportunities in the Canadian dollar. So that really leaves us with two more. So the third currency I'm going to be looking at to the long side next week is the euro. And to the short side, I am going to be looking at the Swiss franc. So we could look at the pound, we could look at the New Zealand, both of these are kind of almost neutral, but the New Zealand is moving in this direction. And with the Aussie and the CAD, two commodity currencies at the top, this is really signifying risk on coming back into the markets. And what currencies suffer when you have risk on, you have stocks going up? The Japanese yen, the dollar, and the Swiss franc, because these are the safe haven currencies. So I'm going to skip next week. You could maybe look for New Zealand shorts, but I'm going to skip New Zealand shorts next week. I'm going to be primarily looking for Aussie longs, CAD longs, and Euro long positions. And we just looked at that with Euro dollar. And I'm going to be looking at those primarily versus the yen, the US dollar, and my third choice next week is the Swiss franc. So in today's video, we're going to be looking at and assessing the markets of Aussie yen to the upside, Aussie dollar to the upside, and also Aussie franc to the upside. Next week at the top of my watch list alongside that is also the CAD yen pair to the upside, US dollar CAD to the downside, and also CAD franc to the upside. And finally, we're going to be looking at Euro Yen to the upside. We've already looked at Euro Dollar, but we're also going to look at Euro Franc to the upside in today's video. Okay, so kicking off the watch list with crude oil. Now, crude oil honestly has been a bit of a boring market. You know, ever since we had this spike up at the end of October, we've kind of consolidated and just gone nowhere. I mean, we don't have any range on this market. And if markets are not taking out the upper and lower bounds, it means they're not moving. And if they're not moving, it's not really, in my opinion, in play. So I really like to see markets that are actually showing some kind of range and, you know, starting to move before I get involved, especially if they've previously been doing this for a couple of weeks, because this can kind of go on, you know, for multiple weeks, 5-6 weeks. So I am overall still interested in short positions only. But when we go and look over to the left-hand side, you can see the prior high is all the way up here as well. So we don't even have a key area of resistance, you know, on the 4-hour chart or the daily chart. It's preferable, but on either the daily chart or the 4-hour chart, kind of in the first half of this range. So it's not a great market. We look at it every single week, but here's what I will be looking for. If we do come up and we take out the 63.58, and I have, you know, all alerts are set in HedgeDash actually as part of the HedgeDash platform, but you can set these alerts, you know, you can take these levels, put them on your charts and just set the alerts on TradingView or something like that. This is where I'm going to start to look. So if this gets triggered and we get an alert and I can see that crude oil has turned oversold during the week, then what I'm going to do is, because we don't have any highs over here, I'm going to start to look for crude oil to make its own highs. So I'm going to look for the price to push up, pull back. Key area of resistance has been formed here. Now, again, this is an area of resistance in the past that pushed price down. So, you know, it's okay, even if it's just happened. And then it comes back up and now we're starting to get in kind of double top territory, or, you know, maybe even comes back and we get kind of head and shoulders territory. So that's what I'm going to be looking for crude oil, but it has to trade above the 63.58 for me to be interested next week. If it doesn't do that, I'm not going to be interested, because I don't want to try and breakout trade this to the downside, because look how many kind of false breakouts you get. It sells off, pulls back, false breakout, you know, bounces higher, sells off, pulls back, you know, kind of doesn't do too much. So I really want to see it above the 63.58. And if we get there, I'm going to look for those double tops, head and shoulders. But if we don't test this, we don't turn overbought next week, I'm really going to sit crude oil out once again next week. Okay, so moving on to the Forex universe, starting with the Aussie pairs. Now, just remember we have the RBA on Tuesday morning, but I can only still be a buyer of Aussie yen next week. I cannot sell it under any circumstances, even regardless of what happens on the RBA. So just like with other interest rate decisions, you know, if we get a neutral outcome and nothing really happens and they're not expected to raise rates, so if they don't raise rates and they don't really say anything going forwards, you know, it may just pass as a non-event. In that scenario, I would simply be treating it as if the event didn't happen. There's a really nice area down here. We've got this ascending trend line and we turn oversold below the 101.94. So you can see how we get this intersection of an oversold area and the bounce of the channel. You know, usually it's going to come down below the channel a little bit, and then as it bounces up, the channel gets adjusted. So very rare to see this kind of bottom ticker channel like that. So it's probably going to break through, maybe even test this low. That would be great as well. Now we've got 3 pieces of data which suggest Aussie yen could be pushed higher, right? We've got an ascending trend line, we've got a horizontal support level which pushed price higher in the past, and we're oversold, meaning we have a much higher chance of bouncing back. So that's what I'm going to be looking for next week in Aussie yen for a 1 or 2 day reversal to the upside. If we get, so that's really in the neutral outcome. If we get a very positive outcome, this is where you can look for that kind of, that's when really breakout trading comes into its own and you get better results from breakout trading, when you have a catalyst like that. You know, having good portfolio selection is also a catalyst. It's like a technical catalyst in a way, which basically says if you've got a very strong currency, very weak currency, breakouts are more likely to work. If you've got a neutral market, breakouts won't work. So if you kind of get a choppy market into Tuesday or down day on Monday and not much happens, and then you break out to the upside on the actual event itself, you can look for the moving average to follow it, and you can look for that break kind of consolidation, and you can look for that bull flag set up into, and you'll have the wind, you know, in your sails if you get a bullish outcome. And a bullish outcome might be that they raise unexpectedly by 25 basis points. Maybe they hold interest rates, but say they're going to raise rates, you know, more than expected next year, something like this. So those are the two main things, you know, I would be looking for next week after the RBA meeting. The third thing is if you get a really bearish outcome, then, you know, what I would be looking for down here is these lows. So I'd be looking for the market to come all the way down, you know, if they cut rates unexpectedly and we saw the Aussie tank. Once we get below the 171, these are the lows right here I would be looking to potentially time a long opportunity from. So these are the two things I'm looking for. But in the scenario we get a very bearish Aussie, I can still only buy the Aussie. And so that would be the area I'd be looking to buy. Next is Aussie dollar. Again, I can only be a buyer of this or do nothing. So I would ideally like to get involved in all the Aussie pairs after the RBA. So it'll kind of be from Tuesday after the RBA onwards. So I'd like to see is ideally, you know, a kind of neutral outcome. So basically it's a nothing event. Then I'm basically going down and looking for this to pull back below the 0.6575. There is a prior high over here, which is kind of prior resistance turn support. So again, this is a price point which drove price lower. So it is broken resistance turn support, but I would really like to see this come down and take out this level. Now, if we can come down to here, this would be a great place to start to look for a 1 or 2 day liquidation to the upside. The only thing with Aussie dollar is we've got 2 interest rate decisions next week in this pair. So you may need to wait. Let's say RBA comes out and just basically there's no surprises. You know, the Aussie dollar pair goes nowhere. There's a very good chance that's going to continue to go nowhere into Wednesday. So you may actually end up looking at these setups kind of more on FOMC than RBA. So just bear that in mind next week. So either way, you know, if RBA and FOMC passes and there's no real catalyst, then I would be looking for this kind of opportunity with this prior low down here at the 0.65525. If we get a bullish outcome from the RBA, or if it just kind of floats into FOMC and we see Aussie dollar rallying hard, that's when you can look for your bull flag set up into the profit taking zone, which is 0.67055. And because I can only buy this market, if for whatever reason, either on the RBA or the FOMC, we get a bigger sell-off and we start to break down below the 0.65104, this is where you can start to look for 1 or 2 day reversal to the upside as well. So this is the primary thing I'll be looking for. This is kind of a backup plan. And if you get a very, very strong RBA or FOMC, you know, that's the kind of intra-week breakout to the upside. So there's 3 types of scenarios there that you can look for reactively, because none of us can predict exactly what's going to happen in every single interest rate decision. In fact, it's difficult to predict the outcome of even one of them. So those are the 3 things reactively I would be looking for next week after the RBA and possibly after the FOMC meeting. If nothing happens, then, you know, price kind of drifts into FOMC. Now, what you can see here is Aussie franc has actually had a significant reversal. This is potentially going into a 3rd wave to the upside. You can see this here. So what I would be looking for next week, I can only be long or do nothing, cannot sell this market, especially as this is a major breakout. You know, if we get a bullish catalyst out of the RBA unexpectedly, this thing has a very good chance of going into a big 3rd wave. So what I would like to see is I can only buy this or do nothing. I'd like to see the market pulling back. And if there's kind of a non-event, again, on the RBA, I'd be looking as if there wasn't one at all. In this case, you can see the key area of support that pushed price higher in the past is down here. It's actually below the halfway point. So this is an example of where I would preference that prior high, which in this case actually drove price lower. So this is where we get broken resistance turning support rather than, you know, a price point that bounced higher. So I do like this high over here. If we can pull back to 0.52914, this is where I'm going to be looking for a 1 or 2 day reversal, because once you take out this level, it's not that easy to get back above halfway. So anything beyond that is usually a bit of a stretch. Occasionally you take out one level and take out the other if you get catalysts and you get real volatility, but it's very, very rare. So that's what I'm going to be looking for next week in real time with GMT members. If we get a kind of bullish outcome, so the market kind of corrects into it, and then you get the counter trend break on the event itself, that's when you can look for the bull flag setup. So it pulls back, first kind of pull back into the moving average. That's where there's a good example here. You kind of have a consolidation. It's chopping around, breaks through into the moving average, and you start, this is actually known as a base on a base. So this is where you have a base and then it breaks and then it bases again and then it rallies. But anyway, the point being that it pulls back into the moving average and you get that kind of bull flag move away. So the profit taking target to the upside would be the 0.53950. And the third and final thing I can look at, but it's not my favorite setup, because if we get a really bearish outcome for the Aussie, you know, half of me's thinking, do I want to step in and buy this? You know, we just had a bearish catalyst. You know, should I just leave this one alone? But sometimes you do get really good opportunities where you get a very strong bearish catalyst. It trades down, you know, below the 0.5240. And this just becomes a really good opportunity to buy the dip for a 1 or 2 day bounce. So you can look for that. It's not the primary setup, but it's worth having on your charts as a kind of backup opportunity. This is the real opportunity I'm looking for, a potential bounce from the 0.52914. Okay, so moving on to the CAD pairs, starting with CAD year. Now, remember, we have the Bank of Canada next Wednesday, but we've just had a blowout jobs report. So are they going to come out and cut rates? Probably not. You know, this is one of those scenarios where, you know, most likely they're going to come out, they're going to hold rates, and they're probably going to also accompany that with some hawkish rhetoric. They may even raise rates 25 basis points, but, you know, we'll wait and see. It seems very unlikely, you know, any kind of significant bearish catalyst will come from this. But again, you know, it's always possible. So I think the two main things I'd be looking for next week in CAD Yen is the following. We get a kind of neutral or, you know, slightly bullish to neutral or even slightly bearish to neutral. It doesn't matter. If it's kind of around neutral as expected, I would be looking for CAD Yen to pull back. Breach the 11126. Now we have a daily support here, which is preferable because, you know, the bigger time frames take preference. But we also have a 4-hour support here. But if we can break this area and for whatever reason take out these lows here, this is going to be a great place to kind of buy the dip. It's kind of the bottom of the range over here. You can see basically what would be happening is we'd be falling back inside this range, hit the high, come back, you know, maybe something happens on the interest rate, who knows, and it just kind of pulls back. I've seen this many times, especially get this big move. It looks like this definitely can't come down, but we've seen this pull all the way back. And that ends up being actually quite a good opportunity. When you see a very strong move up at the end of the week, and then it pulls back and tests the prior lows, that actually as a setup works very, very well. So I would be looking for that for a 1 or 2 day bounce to the upside, whether that were to materialize before the Bank of Canada, which is right in the middle of next week, or after, you know, kind of be in early Monday and out by the Bank of Canada on Wednesday, or, you know, wait for the Bank of Canada on Wednesday and then be in after. It doesn't really matter, but either way, I can only be a buyer of this market. So that's what I'm going to be focused on. And the other thing, which is kind of obvious, is that it just kind of bull flags, you know, into the Bank of Canada. And then you get the Bank of Canada coming out and saying, you know, very hot jobs market, blah, 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 blah. Hawkish rhetoric, the CAD explodes higher again. And then you get your first pullback, and that's your bull flag setup. Profit taking target next week is the 113.60. I can only buy this market or do nothing. The backup level down here, essentially where we turn extremely oversold, is the 110.09. I don't think it's going to get there, but, you know, worth having on your chart. If it does get there, you can also buy the dip below there. Next is US dollar CAD. So FOMC and the Bank of Canada on Wednesday. I'll definitely wait until after Wednesday to get involved in this market. If we get from this, I can only short this market or do nothing. Cannot buy US dollar CAD. So if we get a pullback after FOMC and the Bank of Canada for whatever reason, we're kind of halfway and we don't have any. I mean, look at the prior highs. I mean, that's not even really a prior. It depends on which candle. Probably depends on your brokerage. In fact, out of those two, which candle produces a high. There's a more obvious high. It's right up near the second upper bound. So this is quite a way. It does make this a really good short opportunity next week. You know, with both FOMC and the Bank of Canada on Wednesday, something could happen to really explode this higher. So if we took that out, that would be a great opportunity to sell the rip, you know, at that Kiev resistance, which pushed price lower previously, and above the second upper bound at the 1.39760. But again, that's kind of a backup plan B. What I really want to see is the market pushing above the 1.3897. And then either pulling all the way back and testing the underside of here, which would be a great place to pull the trigger on a short. Or if it can't get all the way back there, look for it to kind of push up, you know, and then it kind of stalls out, starts to make this kind of double top. So it creates its own resistance again. So where there's no resistance levels on the left, which push price lower in the past, you can start to look for it to create its own resistance as it corrects higher. And that's when you can look for that 1 or 2 day liquidation back down. The other thing is, after FOMC on Wednesday and the Bank of Canada, you could very easily see this correcting back, and then you get the breakdown. The moving average follows it. You get the pullback, and there's one. There's one, but to the upside, pulls in and then moves away. These are quite tight. These ones are quite tight, but there's another kind of almost base on base. Can you see that? There's a kind of a base there. Breaks up, holds it, and then it starts to accelerate away. But that is what I'm going to be looking for. Profit taking target to the downside is 1.3739. This market could get super volatile on Wednesday with 2 rate decisions in one day. So I'd really be looking at this at least after FOMC, in my opinion, next week. But I can only short it or do nothing. And the final CAD pair is CAD franc. Now I've started on the daily chart here because I want you to see the significant low over here, which tested again. Look at this. Broke, and look at the test on the underside. So this is a fantastic level. In fact, I've added both this high and this daily low here. They literally strafe the lower bound next week. The other thing you can see here is we've had this breakout over here. There's your failure to make a low. So now we could be potentially heading into a third wave. Think about the bigger implications of that as well. Potential third wave to the upside in CAD franc, potential third wave to the upside in Aussie franc. What's that screaming? Risk on. This suggests we're actually going into more of an either a kind of inflationary or at least risk on environment where, stocks would go up as well. So we are actually seeing quite a bit of risk on, in my opinion, coming to the markets. There's a lot of talk about recession in the US, etc. Maybe. I certainly think coming into the back end of this decade, 2029 into 30, we could see a real significant sell-off in stocks. I mean, a real kind of, we get into that 100-year cycle where, the last 100 years before that, there was the Great Depression, etc., etc. But at the moment, I do think that mainly we're looking at risk on. So going into next week, I can either be a buyer or do nothing. What I want to see is, I want to see this market pull back, preferably test those 2 significant highs and lows that are either side of the buy zone next week or the start of the buy zone. This probably also will pull back into the moving average. So I'd like to see this, and I'll be looking, primarily after the Bank of Canada. I mean, if it sells off on Monday and I can get involved and be out by Wednesday, great. But if it pulls back, does nothing, and then after the BOC tests its level, this is where I'm going to be looking for the next bounce to the upside. If you hold on to this for 2 weeks, it'll probably go up to the upper bound next week. But that's what I'm going to be looking for primarily next week. If we had some kind of, freak bearish response from the Bank of Canada next week because they came out and said something extremely bearish unexpectedly or cut rates unexpectedly, why that would happen after such strong jobs data, I don't know. But just putting the options on the table, it would still be below this low, just so we're not surprised by anything. It would still be below this low here that I'd be looking for that kind of buy the dip opportunity. I don't think that's going to materialize. So this is what I'll be looking for next week. And again, when you have a catalyst, you know, that kind of breakout trading can really outperform. So if it pulls back and does nothing, and then you get the breakout on the Bank of Canada, that's when you can look for the pullback. Moving average follows it, and you get that bull flag set up. Usually you get the push, the pullback, and then the rally, you know, either to the upside or the downside in the 4 hours. You get that one, pushes up after the news, pulls back, and then a secondary rally. So the profit target next week to the upside is 0.58667. I can only buy this market next week. Cannot sell this market under any circumstances. Okay, so wrapping up the video with the euro pairs before we move on to gold and silver. Starting with euro yen, you can see we've been consolidating. I can only buy this or do nothing. The moving average, you can see trending, and then it goes straight through the middle. So it's consolidating, it's kind of ranging. In this case, it's consolidating. I would call this consolidation, not a range, because it's tightening. But what I really like about this is we have that trifecta of confluence down here where we have the buy zone, we have a really nice prior low, and we have the bottom of this channel to the upside. So don't worry too much if it goes sideways and breaks through the channel. The point is down in this area, if we come down, we breach this and test the 178.96. This is going to be a great place to look for a 1 or 2 day reversal back inside the range and also back inside the channel next week. If you continue to just move sideways and the moving average tracks it, that's when you can look for the breakout. You know, you get that consolidation breakout during the week. The moving average turns up, price consolidates, and the profit taking target next week would be the 182.57. I can either buy this or do nothing. Cannot short this market next week. And the final euro pair before we move on to gold and silver, because we looked at euro dollar at the beginning of the video, is euro franc. We have a really nice daily low. Now we've got 4 hour lows down here, another 4 hour low here, but we have a really nice daily low at the 0.9314. This is the area I want to see the market pull back next week. breach the 0.93274. That's where we turn oversold during the week. That's where I get an alert and I begin to look for support, tests of support, failed breakouts, double bottoms, etc. So once we get into this area, it's the 0.9314. I really want to see the market test because that's going to give us the best opportunity for a 1 or 2 day liquidation. As we're starting to push higher, you may start to see it break down below the moving average, and then you get the re-break back above. That sets up your bull flag setup, and the profit taking target to the upside is the 0.9410. So either way, I can only be a buyer of this market next week or do nothing. Selling this market is not an option for me. Okay, so wrapping up the video with gold and silver. I can only be a buyer of gold going into next week, and I'd like to see gold pulling back and turning oversold during the week below the 4093.10. We do have this prior 4-hour low, but it's quite deep. I mean, it's about halfway. So we could get there, but when you get a very, very deep support level like this, there's kind of nothing but air. You can also start to look for it to make its own lows. So again, if it comes down and bounces, and let me give you a couple of variations. It could come down, it could bounce a little bit. So it's formed its own low. And the next move could go straight through like this. It pulls back, it retests the underside, then it sells off, and then it hits here. Now we start to get into that buy the dip opportunity from here, okay? That's one way you could see this coming down. But another way is it could come down, it could bounce, it could kind of hold, it could retest the low there, and this kind of a setup, instead of going straight through, this is where you get more of a double bottom. That's where you get your liquidation for a 1 or 2 day reversal. So that's what I'll be looking for. You can see the moving average is also flat, so you can look for that breakout, look for the moving average to follow it, and you get that kind of bull flag opportunity into the 4301.82. That is the profit taking zone next week. I can only be a buyer of this market next week. I cannot sell gold under any circumstances, especially with a bearish bias in the dollar. It really does mean that I can only buy both gold and silver next week. And last but certainly not least, silver, because this is a really, really, really strong market. And I only want to be a buyer of this market. And I absolutely do not want to short it. I did say back over in this area, I would still be a buyer of silver on balance. I think it's a bit too early to short, but even I was surprised at how strong the breakout has been in silver. So we had this rally. We're now going into correction. As you can see, the moving average is starting to go sideways. So I'd like to see this correction pull back. There is no significant low down here because of the strength of the move, but look at the prior high of the major breakout level. It's not quite, but it almost started to form this kind of ascending triangle breakout. So I'd like to see silver come back, turn oversold below the 55.49 and stair step the prior high. This will be the area I'd be most interested in next week for a 1 or 2 day bounce to the upside. If we continue just to get real strength, we're failing at the high and we bounced at the low. So this is going into a kind of rectangle pattern. Then you can look for the breakout intra-week, and what you should see is the breakout should come, the moving average should follow it, and then you can look for that bull flag setup into the 61.09. But I can only be a buyer of this market next week. I cannot sell this market under any circumstances. This preferably a buy the dip from oversold levels and a stair step of the prior high. That is exactly where I'd like to get involved next week given the opportunity. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge Hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge Hedge platform is included with every GMT membership.